Canadian Mortgage Weekly for October 26th for our pre-rate show and the Bank of Canada interest rate announcement. Really excited to be here today. I'm your host, Joe Bladek, and we're going to be covering the Bank of Canada's interest rate announcement today. It's going to be a fantastic episode. We got a lot of content to cover for you all today. And just before we do here, I'm going to check something out. All right. We'll just take a look at that today and looking forward to looking into the rate announcement today. It's been a very anticipated rate announcement today. I know that here on Canadian Mortgage Weekly Live, Canada's only video mortgage news podcast for the Canadian homeowner, we've been getting a lot of questions about what's happening with rates, where are rates going, and what should we expect in Canada for the Bank of Canada to do for interest rates. I know there's a lot of people that are really feeling that they're not knowing what they should do with their own mortgages. And the goal of this podcast today is to try to alleviate some of those concerns and thoughts and just give you some good advice going forward as to where everyone's at and what you should do as a Canadian homeowner or potential mortgage, potential getting a mortgage right now, because there's a lot of people that are just wondering what to do with mortgages and what to do. So before we get into the actual rate announcement, there's a lot of data I did want to cover today. And with that data comes some past information that has been sort of the news leading up to today. So what are people expecting for the rate announcement today? Well, a lot of news outlets have been reporting that they are expecting a 75 basis points increase today. Some have reported that they expect a 50 basis point increase. However, most consensus is actually a 75 basis point increase. Inflation has been falling since July. We peaked and now inflation's sitting at 6.9% in Canada. We're under 7%. Very excited to see that. Inflation is still going rampant. Prices are still rising. However, inflation is still here. So Bank of Canada has a duty and a mandate to bring the inflation back down to 2%. So where does that leave clients that have taken a variable rate mortgage? Well, for clients that have taken a variable rate mortgage, their mortgages are going to start hitting the trigger rate shortly. And with that, it's really important to understand that trigger rate only applies to variable rate mortgages that have a fixed payment. So that means that as the interest rates go up and as your variable rate mortgage is affected by those interest rates going up, your payment doesn't change. It's actually your amortization that changes. So when your amortization changes, your amortization can go from 30 years to 35 years to 40 years. I've seen some people over 50 years right now. And those people that are going to hit their trigger rate are going to essentially see that the amount of interest they're paying on their monthly payment is exceeding the payment. And there's absolutely no principal being paid. So those banks are going to start reaching out to them to shortly do a payment reset. If you have any concerns about that, give me a call. My number is just on the bottom there, ticker below. What's been happening with the bond yield? And why do I talk about the bond yield? Well, the bond yield really has to do a lot with fixed rates. And fixed rates are largely determined in Canada by the bond yield. And when people talk about the bond yield, if the bond yield is going up, the 5-year bond yield is going up in Canada, then 5-year fixed rates will shortly follow suit in rising. If the 5-year bond yield is going down in Canada, then 5-year fixed rates do follow suit shortly after, with them falling as well. So currently 2 and 3 year bond yields have been rising. And because of that, we've seen 2 and 3 year bond fixed rates rise as well. Currently, the 5-year bond yield is sitting at 3.61%, and it has risen 35 basis points since the last announcement. And that means that fixed rates have increased since that last announcement. So what does that mean for you? It means that if you go out to get a fixed rate today, it's a little higher than it was the last time we did a Bank of Canada interest rate announcement. All right, we have 9 more minutes left until the Bank of Canada releases its live announcement here. We are minutes away. Following the CDOR rate, right now it's at 4.73%, and the variance from prime is 0.72%. Still under 2%, which does mean that if you're taking a variable or a fixed rate mortgage, you really should consider both options equally. One is not better than the other. But usually if the variance on prime is over 2%, then variable is a more favorable option than fixed. So if you're taking a variable rate mortgage right now, make sure you have a talk with either myself or your mortgage professional on why that is a better solution for you. Articles, what have they been saying in the market? Well, a lot of articles are saying that inflation is still rampant. As I'm saying, inflation is not over. Variable rate mortgages are still popular, though, for lower payments. As a matter of fact, right now, I have still people that are taking new mortgages on. And when we talk about fixed rate and variable rate and the risks as well, a lot of people are taking variable rate mortgages. So it's very interesting to see that. And I'm excited to see what today brings. We are about 8 minutes away from that rate announcement. Articles also reporting that the Bank of Canada should stop increasing interest rates at the moment because they have been so aggressive this year. And they want to let the dust settle to see what everything's going to happen in the market and how the market's going to react to these interest rates that have been occurring all year long. All right. So what about the real estate crash? Well, a lot of my clients and clients out there are thinking that a real estate crash is imminent and is coming. There's a lot of clients that are in that boat. If you're in that boat, I would love to hear your comments as to why and how far you think the house prices will crash. I also have a lot of clients that believe we are already in the real estate crash. I know that since the peak in February of 2022, when average Canadian home prices reached $830,000 plus, we have dropped since then to the bottom 23.8%. And 23.8% is quite a bit. We've had a lot of clients actually purchase homes late this summer because they believe that the market has bottomed out in the late summer. And these are experienced investors that I'm talking about that are purchasing homes right now. They're not the first-time home buyer, they're investors. So why are investors thinking that the market is bottoming out right now, while first-time home buyers and second-time home buyers are thinking that the market will bottom out next year? I don't know, it could be a media-influenced thing, but looking at the data, I have seen that since August, house prices have been on the rise. For example, August 2022, the average Canadian home price did rise 1.5%. And in September 2022, the average Canadian home price did also rise another 0.44%. It's very interesting to see this data come out because everyone's telling me the market will crash, but yet I'm already seeing house prices rebound. It's also area specific, so maybe your specific market hasn't rebounded yet, or maybe your specific market hasn't bottomed out yet. But on average, over all of Canada, that's what I'm seeing. So rate increases have become normal now. Every time we talk to clients right now, I'm seeing that, they're expecting rates to have gone up. They're just hoping to get the best rate at the time. A lot of people are just thankful to be getting a mortgage right now because lending has become so much tighter. We have a lot of banks and lenders and non-bank lenders coming out, making their lending requirements stricter right now, lowering the amount you can borrow, which is also putting a limit onto what people can afford, which because of that can put downward pressure on the housing market. However, I'm also seeing that the government is concerned that we have a housing crisis, that there's not enough housing available in Canada, that there's over 400,000 people immigrating to Canada each year, which is causing such high demand for housing. Those people do not want to rent. I was just speaking with a client yesterday evening. They are doing whatever they can to buy a home right now. They don't care about the interest rates. They don't want to pay rent. Rent has ballooned significantly. What are they going to do? They're going to get their mother, their father, their brother all on title and try to all buy a home together. So for people that are in a variable rate fixed payment mortgage, this interest rate announcement could mean that they hit their trigger rate and shortly after or today, a payment reset. When a client hits a trigger rate and exceeds the trigger rate and needs to reset their payment, the client usually has 3 options. And feel free to give me a call if this is some options that are presented to you. Those options usually are to make a lump sum payment on your mortgage to bring the principal down, or to raise your payments to the payment reset level, or to lock into a fixed rate. A lot of folks don't like locking into a fixed rate because it means that they are now going to pay that higher interest rate and higher payment for the remaining term of their mortgage. A lot of clients who have taken a variable rate mortgage want the opportunity to reap the savings of that variable rate mortgage going forward. So it totally messes up that original plan if someone takes the fixed rate. Please give me a call if you're looking at that. All right, we have 2 more minutes. Let's get through some more news here. Last time there was a rate increase was in September 2022. We did go up 75 basis points. And before that, we had a rate increase in July of 2022 with a 100 basis point increase. Last time there was a rate decrease was in March of 2020. That was a 50 basis point decrease. So last time since we reduced rates, we're about 2.5 years since the rate reductions. Other websites are reporting inflation has been falling recently. Bond yields have risen just steadily, very limited, not very much over the last few months since the last meeting. But what is also really amazing is that websites are reporting, and also CREA, Canadian Real Estate Association, is reporting that the average Canadian home price has risen for 2 consecutive months now. 1.5% in August, 0.44% positive in September. So really amazing to see the average Canadian national house price average rise 2 consecutive months in a row during a time when rates have been increasing in Canada. All right, we're about 1 minute away from this rate announcement. Very pumped to be able to share this with you. We're going to be showing this to you in just a moment. Rate hike chance today, based on a website that I follow very closely, is 100%. That's a website called 𝗪𝗏𝗏𝑑ashboard.com. Please check it out. And the rate hike chance that Mortgage Dashboard, or maybe it's .ca, is reporting in the next 9 months is 0%. So they don't believe that rates will continue increasing at all in 9 months. And 9 months does bring us into mid next year. And that would bring us to the end of what I believe will be the rate increase cycle as well. Because rate increase cycles in the past have lasted about 12 to 18 months. All right, so we have the announcement. Again, we were thinking of a 75 basis point increase, and the Bank of Canada does increase rates today by 50 basis points. continues quantitative tightening. There's also a monetary policy report that has been released, which I'll get into on tomorrow's episode of Canadian Mortgage Weekly live here on YouTube and Facebook, Twitter, and Instagram, weekly at Thursdays at 11:30 a.m. Eastern Standard Time. Check us out there. We'll be covering the market reaction to this 50-point basis increase in interest rates, and we'll be covering as well the monetary policy. All right, so it's not quite as high of an interest rate increase as we were expecting, which we were expecting 75 basis point increase. However, it is a 50 basis point increase. Very, very interesting. We will get into the monetary policy report that they've released along with this interest rate announcement tomorrow on our episode. In the meantime, let's take a look at what this change means for you, the Canadian homeowner, mortgage holder, or potential home buyer. All right. Since rates did go up 50 basis points, anyone that has a variable rate mortgage, a home equity line of credit, a line of credit, personal line of credit, unsecured line of credit, maybe a variable rate car loan, variable rate credit card, all those borrowers will be affected by this rate increase. Whether it is that your minimum payment will increase, or your mortgage payment will increase, or your car payment will increase, or simply the amount of time you're paying off the loan will increase, in some way, your loan product will be affected. All right. You will receive most likely a letter from your lending institution advising you of the new prime rate if you have a mortgage and how the payments will change if your payments are changing. All right. Keep in mind that you can lock into a fixed rate with most mortgage lenders. It most likely will not cost you anything to lock into a fixed rate. Drawback being obviously that fixed rates being so much higher than variable rates right now, you will take an immediate hit on another increase in payment just to keep that payment locked in, and it will be locked in for the remaining term of your mortgage, which, as I mentioned earlier in this episode, a lot of people do not prefer. They prefer to reap the savings once rates do take a turn back down. All right, so that is today's rate announcement. 50 basis point increase in Canada as the Bank of Canada does increase rates yet again for another consecutive Bank of Canada meeting. Continues quantitative tightening. Join me, Joe Bladek, on tomorrow's episode of Canadian Mortgage Weekly Live, Canada's only video mortgage weekly news podcast, for a market reaction and a rundown of the monetary policy report here. Looking forward to going over this with you. Again, 50 basis point increase in interest rates today. Really interesting to see that. I'll cover the monetary policy report that did come out just now on tomorrow's episode of Canadian Mortgage Weekly. And as I mentioned, anyone that has a variable rate mortgage, a home equity line of credit, a variable rate car loan, an unsecured line of credit, or variable rate credit card, your loan products will be affected. And that's either by your payments changing or by the amount of time it takes to pay off your loan product. And if your payments are going to change, your banking institution will send you a letter just stating those payment and prime rate changes. All right. Well, thanks for joining me today on this rate announcement and my pre-rate show, just leading up to all the news that happened leading up to this rate announcement today, as we are seeing that the Bank of Canada did increase rates by 50 basis points. Join me tomorrow as we react to this news here on Canadian Mortgage Weekly Live, Canada's only video mortgage weekly news podcast. And I'm excited to see what reactions you have. Perhaps you have some reactions that you would like to put in the chat below, and that what you think is going to happen with the rates going forward, and what do you think how house prices are going to be affected going forward. Thanks for watching today. My name is Joe Bladek, and if you need any mortgage advice, please contact me at 705-238-3479. I am a virtual mortgage broker working all across Ontario, and we air out of Orillia, Ontario, this episode. And I can meet with you via Zoom, Skype, WhatsApp, text, or phone call, any way possible. And we can discuss your mortgage and what you need to do and what options you have. Okay, I see we have some questions in the chat. I want to address those questions now. Can a trigger rate be raised? Well, a trigger rate is actually agreed upon when you take out your mortgage originally. And a trigger rate is that time when, if rates do rise and you do hit your trigger rate, there are three options that you can do as a mortgage holder. And that is to do a lump sum payment. A lump sum payment will actually raise your trigger rate going forward, so you won't have to deal with that again until the next trigger rate has occurred. Or you can lock into a fixed rate for the remaining term of your mortgage, which doesn't cost you anything. However, you will see that immediate bump on your payments, because not only are you taking a current rate increase from today's Bank of Canada interest rate announcement, but you're also taking an increase on the fixed rate. And you can also take in the new payment reset, which will essentially reset your payment to the higher rate, and then your new trigger rate will be raised from that point. So great question. Thanks for asking that in the chat. We do see some people that are suggesting that prices are not going up. And as I mentioned, in specific markets, they haven't gone up yet. But all across Canada, we are seeing an average national house price increase for the last 2 months. And those statistics, I'm a mortgage broker, are taken from CREA, Canadian Real Estate Association. I'm not making those statistics up. So take what you will from those statistics. It's really interesting to see that the national house price average in Canada has been rising despite these rate increases occurring over and over again here in Canada. So thanks for your comments, everyone. I'll make sure to answer the rest of the questions later on. Feel free to leave your comments below. And in the meantime, I hope you have a great day. Thanks for watching Canadian Mortgage Weekly Live, Canada's only video mortgage weekly news podcast. And we'll see them next time.